Good morning. It is Friday, June 7th, and we're going to call this officially, it's Roaring Kitty Day. It is officially, the man is a legend, and we will go over stuff. Ryan Cohen is no longer a hero in this world. He is a villain, not a villain in the sense of a CEO, but a villain in the sense of retail traders. We'll go over all of that. We'll go over the Dow against the Qs against SPY. We'll go over everything. I got a couple of things. Oracle, I think it's bullish next week for earnings. Don't miss Roblox and a gap. Apple, NVDA. Rivian had a great announcement. VRT is pulling back. Taiwan Semi's a winner. We'll talk about T1 settlement, and then we'll go over some of the social requests, including somebody put $15,000 on GameStop. But let's say where we are on the Qs. Yesterday's trading, it wasn't great. I mean, we had two red candles, but we wound up. You had the morning candle, you opened up at 464, you closed at 463. The afternoon candle, you opened at 463, you closed at 463. It was, kind of just a sideways thing. But we talked about the previous high at 460 is the new support. Once we break that support, then you've got to find new support. And I think the 450 is your next support below that. I think through the next week or so, I think that provides a good sense of what's going to happen. Today, we got non-farm payrolls right here up, steam in May. The bond rates went nuts. 10-year bond went up to 4.4. This just means higher for longer. They ain't going to, we have a Fed meeting next week. I talked about it yesterday. They're not going to lower. And that means higher for longer, which means the market's going to take a little step back. How far back? Who knows? You got to watch your support level. Right now on the Qs, 460 is it. But what I do want to point out is this chart in Seeking Alpha. Okay. In Seeking Alpha, you can do these kind of charts for free. So don't think that you have to sign up. But if you want commercial free, ad free, if you want all the analysis, if you want the quant rating and things of that sort, make sure you sign up for Seeking Alpha Premium. It's $189. I get you 20% off. You get a free 7-day trial. It is by far my go-to for any fundamental analysis. And in fact, I was just looking up a couple of stocks. There's a couple of stocks that I really like that I may put into my portfolio. I'll let you know when I put them in my portfolio. But the quant rating just outperforms unbelievably. Get your free 7-day trial. Click on that link. But what I wanted to point out is the last month, the Dow is only up 0.23. IWN, which Tom Lee, by the way, and I'm not going to bash Tom Lee, but the guy is wrong sometimes. He said IWM was going to triple by the end of the year. Well, it's not even close to tripling. Over the last month, you're down 0.43. So if you put your money into Tom Lee, okay, say you listened to Tom Lee last month because he said, well, IWM's going to go up, and I always listen to Tom Lee. He was wrong. He was wrong. And again, he came out a week ago and he said, I think you should stick with what's working is the Qs. And I went over it yesterday with my portfolio. The reason I am buy and hold is because of the long-term Qs. I am tied to the Qs. I am a NASDAQ big cap investor. That's just who I am. When those things are running, I want to be as far into the market as I can be. And so this chart, important to me because I want to see, okay, the Qs are at the top. Do I want to get more into a VOO, which is the S&P 500? I don't know. Maybe. But I like XLG, which is the top 50 of the S&P. That's, again, more bigger cap. It's a big cap. It's loaded more towards tech, but it's got Eli Lilly, it's got Berkshire, it's got a nice mix XLG. I put it into the newsletter yesterday. DIA is just the Dow Jones. That's only up 0.23. So when you look at the indexes and which one you want to follow, I urge you, first, decide what type of investor you are, what types of things you're interested in. If it's the S&P 500 and you just want to be a generalist, that's fine. Just go into there. If it's tech, you should be tied to the Qs. If it's small cap and you want to focus on some just minimal stuff, then go into IWM. If you want just the 30 Dow stocks, then go into the Dow, DIA. But understand which type of investor you are, then tie yourself to an index, and then start investing like that. That would be my guidance for that. Okay? Now, we're going to talk about the big news of the day. Once we get through that, the non-farm payrolls are out. Absolute legend, Roaring Kitty, greatest investor of all time. He was a billionaire for about 30 minutes. And what we're going to do, we're going to go into Trendspider. By the way, if you don't know what type of investor you are, Alpha Picks is probably for you. Because if you don't know which type of stocks should go in your portfolio, this is a perfect opportunity for you to actually get to understand how stocks are picked. Alpha Picks is 2 data-driven stocks each month. It alerts you when to sell. They tell you when to buy on the 1st and the 15th of each month. It is diversified across tons of sectors. It has outperformed the S&P. Say you want to be an S&P because you want to be a generalist in the S&P. Well, you're up 35% during this time period. You know what? If you had just picked Alpha Picks, which are an expert-driven stock picks per month, 2 per month, 122%. And you have a couple of ways of doing this. You can do it by buying the entire portfolio on day one. It's over 20 stocks. Or you can pick 5 of them because they rate them on strong buy, hold, and stuff like that. But let's talk about GameStop. GameStop is one that you need to trade with a strategy, and it's important. And I've said this. With GameStop, I like this A+ setup. I do not like the exit on this. And this is a perfect example of why I don't like the exit. So here, the algorithm got you in at 30 yesterday, okay? There were several times you may have thought, okay, it's going down, I'm going to get out. It got you out with a nice 3% gain there. But I would argue you shouldn't have gotten out. Now, the reason it didn't get you back in is because there's an RSI component to this entry, and it was overbought the entire day. And we got up to 43 at about 1340, and then it came back down. And then what happened? Roaring Kitty decided we're going to go full balls, balls deep. We're going to do a live stream tomorrow. And the live stream already has thousands, tens of thousands of people in a chat. It doesn't start for another 2 hours. There are people chatting like there's no tomorrow. These are not bots. Look at that chat going. That is crazy. Now the chart, and we'll go back to the chart. It got up to $67. $67 yesterday. Roaring Kitty was a billionaire for about 10 to 15 minutes. And then what happened this morning? Well, GameStop, they announced, horrible earnings. Just horrible earnings. There are Waffle Houses. We say this about DJT all the time. There are Waffle Houses that make more money than these guys do in a quarter. That's just it. I mean, that's the problem. It's a company that doesn't make sense. He is basing this on the shorts. And what happened this morning that brought this stock all the way from 61 down to 40 and then down to 35, I think it was? It's because GameShare said, you know what? We're going to sell 75 million more shares of stock. 75 million. Remember, he's got, this is the screenshot that he posted. He's got $232 million in actual GameStop stock, but he's got 324 million. It's 120,000 contracts. Now it's 100 stocks per contract. That means 12 million shares. So when you go over to FinViz and you look, it's this fourth column to the right. It's the second from the right. Sorry, second from the right. Shares outstanding. That's the amount of shares that total GameStop has approved. Okay, 305 million. They just added 45 million in May. They're adding another 75 million. It's 120 million shares. That's almost 50% of the company that they're adding. What does that do to his, before you had insiders, you had short sellers, and you had retail sellers. And that probably added up to maybe about 40 or 50 million shares that were available, or could be available, maybe even less. That means 12 million shares when he executed it would have forced E-Trade to actually buy 12 million shares. It's unlikely the clearinghouse, Citron, I think it is, had 12 million shares sitting around. So, again, he is most likely going to exercise this option. And when he exercises it, the clearinghouse is supposed to have those stocks available to push towards his account. If not, they have to buy those shares and they have to put them in his account. And when you buy, if you have a limited amount of shares, that pushes the price up. Well, the price with 75 million shares and 45 million shares in May, it's not going to push the price up. That's the problem. That is the problem. That is the exact problem. And so you've got GameStop now. It pulled all the way back. Will it rise again? I don't know. Nobody knows what he's going to say at 12 o'clock. He put out a super, by the way, that disclaimer, read it because it is my standard disclaimer from now on. It's entertainment purposes. That's all this is. You shouldn't be following anybody. And you shouldn't be following Roaring Kitty, except for the fact that this man has the ability to move the market. And if he has the ability to move the market and move a stock, it's an ability for you to make money. Doesn't matter. You are not trading this company on fundamentals. Even though they are raising a couple of $1 billion, Ryan Cohen has proven himself just a bad businessman. He sold Chewy. Chewy is just a disaster of a stock. It's coming back now under new management, but he sold it. He built that company, but I don't think he has a plan for GameStop. He could. But with $2 billion, I mean, they're going to raise $2 billion. That's a hell of a lot of cash to have on the sidelines, to be sitting there with a business that sells video games when nobody buys video games. They download video games. That's it. The console stuff is done. It's all downloaded now. So understand you are trading this one. I will be tuning in at 12 o'clock. I don't think there's a TV program that I've been more excited than to watch this actual live event. I mean, look at the cat, everything. I want you to know, members of Congress, I am not a cat. I am not a cat. He's an absolute legend. I think Ryan Cohen should be ashamed of himself as a fellow retail trader, happy as a CEO. I mean, again, he's a CEO. This is him acting as a CEO. I don't blame him as a CEO. I'd probably do the same thing as a CEO. I just don't like that he did this because he basically just got E-Trade out of a bind, Morgan Stanley. And there's got to be some collusion in there. I would think there's some collusion in there. But again, if you wanted this in the 4-hour algorithm, you made 104% between the buy in April and then the sell in May. And then you just got in June at $30. And right now you're at 37. So even with the big drop, you could have doubled your money, that you bought here on June 3rd. You could have doubled it last night. If you doubled it in this thing, I would urge you to get out. Understand you need to trade with a plan. And the plan shouldn't be diamond hands. It absolutely should not be. Roaring Kitty has diamond hands. Dude lives in a basement. Actually, I think he made some money off of the Dumb Money movie and the other kind of movies and stuff. I think he made some money there. But he doesn't have, $1 billion. He was a billionaire for a couple of minutes. So let's talk about next week. Next week, we do have some earnings, and Oracle is one. This one came up on my radar thanks to Seeking Alpha, because I have Oracle in a watch list. So it alerts me every morning with an email. Hey, there's news about Oracle. Chinese companies said to rent NVIDIA GPUs from Oracle to bypass sanctions. Remember, Chinese companies can't get NVIDIA chips. They are limited because the U.S. government wants to limit their access to AI. Well, again, if you're looking at the 4-hour algorithm, the 4-hour algorithm makes you 70%. Buying and holding Oracle makes you 74%. If you can't sleep at night because you own Oracle and it's extended, just trade it in the algorithm. Your average win is 11%. You just got in at 122. Right now, the stock is trading at 123. Just buy it at 122. Again, if we look at the weekly, you're in an upward trend on this one. You are in an upward trend. The 50 days moving. It is respecting that 50-day. The downside from 123, probably 113. I would put my stop loss in at 120, but the MACD, it is perfectly fine. The RSI is in no man's land. So this may be a catalyst for next week. If we go over to Earnings Hub and we look up, we're going to type in Earnings Hub, and we look up Oracle, we can see for next week what the expectations are. Let's just look. By the way, DocuSign, just a shit of a stock. It tanked, and I'm just not a fan. But if we go to Oracle and we look, they reported $1.41 last time. They beat by 2%. This time they're expected $1.53. The revenue is expected at $1 billion. They reported $11 billion. The expectations are up, but stuff, shady shit like this, that may be where they get it. This is part of the AI trade. Maybe TikTok's going to Oracle and saying, hey, can you house our AI stuff for our algorithm when we have to, diverge it to stay in the US? Maybe that's why it is. But Oracle, keep an eye on it. I like it. I like the stock. This is why yesterday, I revealed that 43% of my portfolio is Apple. I thought it was like 65, but it's 43. I have not sold any. It just, as it moved down, it became less, blah, blah, blah. I looked at it. It updated. I actually grew my account more outside of Apple, and that's why it just, it went down to 43%. I haven't changed it. It's at about where it started the year. But I just grew the rest of my account more, which actually, helps me. I just grew that account more and boom, boom, boom. Now it becomes 43%. But Gene Munster puts it really well. And I just tweeted this. And it's going to be in the newsletter. You can read it. But this is just the three reasons why Apple is going to blow it away for the rest of the year. Why I think Apple is going to 250. And if we look at Apple, we're in a pretty good freaking 4-hour run. If you want this 4-hour algorithm, it is free to you when you sign up for Trendspider. Just sign up for Trendspider. Look at this. It's a nice 17% gain. We're seeing a little bit of turnover. I've told you before, this all-time high, 200, just seems to be a ceiling that this stock can't get over. And so 200, you kind of want to trim. I haven't trimmed. I did trim Amazon because 188 seems to be the top until it gets over that. Until Apple gets over 200, 200 is going to be the resistance level. And if we go back on a weekly, we can see it is clear that 200 once, 200 twice, 200 three times, and now it's 4. Now it's 4. And you can see as we dip under the 50-day, these are all buying opportunities. You still have a long-term trend line, this red line, which is the 200 period. It is still moving up. Don't let anyone tell you that Apple is in a bear market. Look at the MACD on the weekly. It is still right at the oscillator. The RSI, it's quickly come up over the last couple of weeks. It's at 61. We may see a flat trading session, but you've got WWDC next week. They will announce some AI partnerships. They will be the first ones to actually put a significant amount of AI on a handheld device. That's big. Now, you think it's too late for NVIDIA? This is a good one from Dan Ives. This is a fantastic post from Dan Ives that puts NVIDIA in the realm of Cisco. Now, I know today is Roaring Kitty Day, but we're going to talk about a couple of other stocks. That's where we're going. This is NVIDIA. The 4-hour algorithm had you in at 838. If you weren't buying this in the 800s because you said, it's a little bit overvalued, you're now at $1,200, okay? $1,200. Next week, you get a 10-for-1 split. You get a 10-for-1 split. This is going down to $120 if it holds this 1,200 level. I would argue we will see a pullback. But at this point, you don't want to wait for that pullback. Why? Dan Ives spells it out for you. It is just something that we're still in the beginning of this. There are significant revenues still to be spent. So do not fall asleep on this. Do not sleep on this one at all. Another one you don't want to sleep on is in the core portfolio. And this isn't based on any kind of fundamentals. This is just based on a stock chart. I've said it before, Roblox is a $40 stock. We had this nice trading range that it was in. It broke down below that trading range based on an earnings miss and a gap down. It went from 40 down to 30. Now, I said it before. This gap will be filled. So the $32 absolute buy. You're at $35 right now. It will get back to 40. Even though today it's down 1.6 to 35, you will get back to 40. If you want to make 7% between now and the end of the year, at some point in time, this stock gets to 40. at some point in time. I really think this is one that you could buy and just hold. Do I think the valuation makes sense? No. Do I think that, long term, this is going to be a winner? I have no idea. I think it's the leader as far as the metaverse goes. It's not Meta, but you can see we're going down. We're going down. But understand, you want to buy this one into strength, and it will be a $40 stock. I like this one a lot. Let's see. Another one that I really like, Rivian. Rivian killed it yesterday. With the new Rivian R1TS and R1S, they killed it. They killed it. They took cost out of the business. And this is what the street wants to see, because they're losing something like $130,000 per vehicle that they actually sell. Now, here you go. 4-hour algorithm. So far, let's see. It got you in at $8. It didn't time the bottom, but you're up 40%. This would have paid for your Trendspider. If you liked Rivian, it would have paid for your Trendspider. How much is Trendspider? It's $53 a month. The 4-hour algorithm would have paid for this. But I like this truck. I like what they said. I like everything that they said. All of this stuff will be in the newsletter today. Another one not to fall asleep on, Taiwan Semi. Look at, if you get Seeking Alpha, you get these nice ratings. And then you can go over here and you can say, oh, it's a strong buy in the quant. Well, when did it become a strong buy? It became a strong buy at 136. Where's it trading right now? It's trading at 162. The valuation is a D. That is a little bit misleading, because the peg, the forward peg, which does the earnings and the growth, it's 43% below the sector median. Now it's revisions C, but here's an article right here, and we can go to let's go back to this article. Let me go back to the actual article. The article says Taiwan Semi's May sales surged 30%. They're also talking about charging NVIDIA more. NVIDIA's got pricing power, but you know who needs to make those chips? It's Taiwan Semi. So don't fool around with this one. Don't fool around with this one at all. You want to know another one that I found? VRT. We talked about VRT being the actual real AI winner and how it's just gone parabolic. Well, you got a nice pullback in VRT right now. You got a nice pullback after a 10% gain in the algorithm. The algorithm makes you 423%. Buying and holding makes you 707%. Over 24 months, there's only 20 positions. Your average win is 24%. This was underperforming that 10%. Realize the algorithm plays in that middle ground. It doesn't time the bottom. It doesn't time the top. It gets you out, but sometimes it gets you right back in. And during this entire time, it got you out, got you back in. You want to play the algorithm in stocks that you can't sleep with. So if you buy a stock and you're waking up in the middle of the night thinking about a stock, sell it. Sell it. Or use the algorithm to actually trade it and make sure that you back test it. So if you back test it, it never guarantees you to make money in the future, but the best predictor of the future is the past. So if you're able to back test a strategy and it actually works, back test it, it should work. Again, we're seeing a pullback. I have an alert. How did I set an alert? I went down to the bottom and I said, oh, this entry in the 4-hour algorithm, there's a little button here that says alert me next time this happens. Now, I don't have to sit and watch a chart. It's going to save me a ton of time. I don't have to sit and watch a chart. I'm going to get a text while I'm out hiking and it says, VRT is a buy, and it will give me the price. I will go into my Fidelity app while I'm out hiking and I can buy it. I don't have to sit at home and watch it. VRT, it is a great winner. If we go over here, let me just show you what article came up the other day when a bunch of people from the podcast bought VRT. It's right here. The real AI stock darling. It's not NVIDIA. And if you want to read this article, go and get Seeking Alpha. Go and get Seeking Alpha. How do you get Seeking Alpha? You go and click on the second link here. The second link is Seeking Alpha 20% off. It is just a great, great way of finding stocks and being able to manage them. The two, Seeking Alpha and Trendspider, perfect together. How's that John Houseman go? Perfect together. Yeah, I like that one. Now, education. Do you understand what T1 settlement is? This was a big, big freaking deal. T1 settlement means that you're settling your account within 1 day. Ross goes over this in 14 minutes, and I will include this video in the newsletter. I will include the video in the newsletter. It's a 14 minutes of your time. It's a great one. Now let's go over some social requests. I forget his name, but this was a new one. It was a furniture dude. Wanted me to look at Dillard's. What's your opinion on Dillard's? I like your approach. Thanks for what you do. He wrote to me on Instagram. If you want anything, you can write to me on Spotify. You can reply to the podcast here. Just ask me for a stock. You can ask me anything that you want. I'll look at it. I may tell you that you're a douche, but understand I'm an old angry guy who yells at kids to get off my lawn. Here we go. Dillard's. The stock chart looks ugly. And again, I'm just looking at the stock chart. It doesn't tell me that there's a huge upside or downside, but I will tell you, over the past 2 years, the 4-hour algorithm makes you 76%. What do you make if you just bought and held? 34%. Your average win, 10%. So you want to listen to the algorithm. Now, the last one, it got you in at 456. You're trading at 424. It got you out right here with a 6% loss. So it got you out with a big loss. Now, when we go from the 4-hour, we go to the next time frame, to a weekly. This one's it's still moving higher. I mean, the 200-day right there, that red line, it's moving higher, which would indicate a higher move for me. But for a department store, I mean, I don't shop at Dillard's, so it's a little bit tough for me to say, hey, this is a great one. I think it's been years since I was even into Dillard's or even past a Dillard's. So you can see the valuation is a C. Everybody's kind of got it as a hold or a sell. It's in consumer discretionary. Understand, the consumer is going through some tough times right now. And so when Wall Street says it's a sell, there's only 3 analysts that covered it. So don't get down about that one. If you hold this, their price target is 348. The stock's trading at 424. That's a tough valuation to take. Take a look at this. They have always underestimated Dillard's, but have they underestimated it by that much? That's a little bit tough for me to say. Now, the revisions of the 3 people, 2 have brought it up. 3 have brought it down on the revenues. So it is an A. When we look at the growth, and this is going to be key, you're losing one. You're growing at negative. I mean, that's why you're going to see this one start to tumble. Say you don't like Dillard's and you want a number 1 in consumer discretionary. PDD is number 1. Naspers is number 3. Amazon, I would go for Amazon. I mean, there's a lot of ones that are Jumia, which has just had a skyrocket of a stock here over the last few days. Just April 17th, this was a $4 stock. It's now an $8 stock, $7.76. So I think there's other ones that are better out there than Dillard's, but I don't want to hate on it because, this is kind of like, it's still moving positive. So, but I just think in the short term, you're probably going to see a little bit of a pullback. A weak consumer is hard. Shep from Spotify, I threw down 15K on GME Tuesday at 31.19. Let's see how it is. I'm out at 50 if it gets there. Well, it got there, Shep. It got there. I hope you got out. Right now, we are trading at $44. It got a huge pump on open. If you want to trade GameStop, I've got a 5-minute algorithm. And let's take a look at the 5-minute algorithm when it got you in today. Got you in at 38. Your average win over the past 2 days, 2%. You can't argue with 2%. It's a good one. You want to play options? Go and play options off of this one. You got a nice 20% move in this one if you bought with the algorithm. Now, would I get out? It's got strength. Your 9 days moving positive. Your 50 days still moving negative. You're kind of climbing up there. I don't know. I don't know what Roaring Kitty's going to say. If you got diamond hands, stick with this one. If you got paper hands, take your 20% over the last 30 minutes. 20% over 30 minutes. Get out. But I hope you, Shep, I hope you got out at 50. Or I hope that you're holding and maybe you're going to get out at 44 or 45. I just think when you hit that 50-day, as the 50-day crosses the 200, that is what's called a death cross. You want to know everything that I talk about, all the terms, go over to the Daily Stock Pick newsletter, and there's an education center on the front page, and you can just go down there and see all. You can see all of them. But in this chart, It's death cross. That means the 50 days crossing the 200-day, 200 period. You didn't have confirmation because it was always on the downside of the 9. Take a look. When this is on the top of the 9-day, that green line, you have what's called confirmation. When it's below that 9, for the majority of this, it just shows you it's weak. You have to know how to trade this. So understand it will move quickly. Luke Reynolds, Sangamo, he wants me to look up. Luke is from Spotify, S-A-N-G. Please give me the thing. Oh, come on. This looks ugly. Sangamo? I mean, what makes you love this one? Let's take a look. We'll look at it in FinViz first. It's not making money. It's losing $30 million. They have 55 cents. 55 cents of cash on hand. They have 33 million shares. What's 33 million times 0.55?
That would be $18,100,000.
Oh, they have $18 million of cash, but they're losing $30 million? Why would you want to invest in this one? I mean, for me, nobody's covering it. Last year, November, Concordia brought it down from $8 to $3.25. You're trading at $5.78. I don't know why you like it. I mean, if you ask me to look at something, we can go over here, over to Seeking Alpha, and we can look at SANG. Now, I think this one is probably going to get a buy. Yeah, it's a buy from the quant. Why is it a buy from the quant? Well, it's got a good valuation. Doesn't have growth. I mean, let's look at the growth. It's losing 2% over revenue year over year. Your profitability, 69% gross profit margin. That's great. Your momentum, it's great. That means you can trade this. Now, if we go and look, you might say, hey, it's got a strong Wall Street buy. There's 6 freaking analysts that covered it in the last 19 days. 6. So don't think that that's a ton of people. But if you want to know about Sangamo, this guy on August 31st last year said buy it. Value wins over dilution. But they will continue to dilute you. Understand. If you go over here, they're losing $30 million. They only have $18 million of cash on hand. I don't know when that $18 million was, but maybe it was on their last earnings in May, which means you got 6 months of runway. And then they've got to dilute you unless they make some money. And they've got 192 million in revenue, 192 in market cap. But if we go over here and we look at the growth, we can see the revenue year over year, they're losing revenue. They're losing revenue. Now, the forward growth is expected to be 5%. Is that great? It's 30% below the market. So, Luke, trade this one. Don't freaking own it. Hi, Carlos Reloba. Love your channel. What do you think of SOUN? SOUN is a stock that got a pump. Now, the revenue growth, huge. It's enormous. The valuation, it's not horrible, but their profitability, they are not making money. They have a 74% profit margin, but they are not making money. The momentum, A+, the 3 months performance, this got a huge pump up from the news that NVDA was investing in it. So this was a retail pump. And what does retail pump usually do? It usually dies. And you can see it's dying. I'm sorry, that's the 5 minute. It's dying on the 5 minute. Let's go and look at a little bit longer time frame. We can go to the 4 hour here. It's got some strength. Algorithm just got you in, got you right back out. That was the pump of the NVIDIA investment in this, where it got up to $9, $10.25. So that was the retail pump. If you look at the weekly of this one, it kind of came back a little and it's just trading sideways. What do I think of it? It's not my kind of thing. Again, I think it got the NVIDIA pump. I think that was essentially where it was at. I think there's better places to put your money. And safer. If you want to put, a couple $100 and trade SoundHound, maybe go on the 5 minute. Let's see what the A+ strategy tells you what to do. It doesn't look great. It definitely looks weak over the just over the last day, it looks weak. It just looks weak. I mean, I think this has more downside than it has upside. Until a company starts making money, I don't like it. I don't like it at all. I'd rather see a company start to make money. Now, let's talk about some companies that make money that look bullish in the 4-hour algorithm. If we go and pick the 4-hour algorithm and we look, we can see Microsoft has another buy in the algorithm. 424. Do you want to buy at 424? We've talked about 430 being resistance. 430 is absolutely resistance. My suggestion is if you want to buy Microsoft, I would rather see you buy it at 432 after a couple of days rather than buy it at 424 and have it come down to 400. We don't know what the Fed's going to do next week. We don't know. Apple may come out and say, you know what? We're going to put AI on our phones. And they already have a deal with OpenAI with a Mac app on your Mac. They didn't go to Microsoft, who put $10 billion into them, and say, we want to put this on the Windows PCs. No, they came to Apple and said, we're going to put this on the Apple Mac, and it's special for you. So it's just a little bit, again, you have to understand, you have to know the stories of what you're investing in. Now, other ones in the core portfolio that just got to buy in, XOM Energy has been showing weakness. Now, did you want to buy at this 116? It looked good. I think you've got another 119, 120 in this stock at some point in time. Energy ain't going anywhere. We're just seeing some weakness. And the reason you're seeing weakness is because China's not buying oil. Now, XOM, they have done a fantastic job of returning money to shareholders. If you look at the weekly on this one, we are still in an upward trajectory. But you're seeing that 120 is a resistance level. So if you buy at 113, you got to understand that 120 is your top. Now we can look at XLK. XLK is the spider sector for the technology. This is an ETF that I own a large amount of. Do I want to buy it here at 215? I would say you're buying it in an extended period. But for the long term, do I mind buying at 215? No. It's going to go higher. We still have room to run. The problem is, do you think we're going to go lower? Well, we got a gap down here. There's a little bit of worry for me on this one. Am I adding to this? No, but it's interesting to see because, again, tech may go for another run. Maybe something happens next week where Apple just continues to run. Google. We talked about Google being a buy under 150. And boy, people came at me for hate when I said, 150, I think that's the resistance level. They came at me with hate. They were like, you just said it was 130. It changes pretty damn quick. The valuation is not crazy on Google. They will be the first ones to actually monetize a search engine that is AI. They will be the first ones to monetize this. And you saw a few weeks ago, I did a chart that compared Microsoft to Apple to Google. When on the day that Microsoft announced they were putting $10 billion into ChatGPT, and everyone declared that Microsoft was the winner. And when Google came out with their, the founding fathers that were of Asian and Black descent, and it was just making mistakes, Google came out and said that. Well, Google's been the winner. Google has clearly been the winner. So Google is a buy. Goldman Sachs. This is in the core portfolio. It has had a nice pullback. Are we going for another leg higher? I told you back here in February, in January, this was setting up for a much bigger move higher. And it did. It went for a run to 470. Now, in a year, your average return over the last 20, 30 years is like 7 to 10%. So if you make 7 to 10% in like 3 months, that's amazing. That is amazing if you can make that. If you can make, 18% in 2 months, 61 days, again, the 4-hour algorithm puts you in here and allows you to trade around these things. It just identifies buys and holds. And Goldman Sachs, 72%. Is what you make over the past 2 years. Again, back testing a strategy. What if you just invested and bought and held Goldman Sachs? You made 46%. I'd argue that Goldman Sachs isn't even the best bank. I'd argue that Citi is the best bank. And Citi's trading at 62. I think this is an $80 stock. Now, where are you going to buy in this one? You're going to buy it probably, either today or tomorrow. The MACD's moving up. My entire algorithm is based on the MACD. There are other moving averages in there, but it is based on the MACD. Now this one, the algorithm makes you 30%. Buying and holding makes you 20%. But take a look at these, 30%, then you get a 1%, then you got a 10%, then you got a 1.4%. Well, we're probably going for another 10% here. You're probably going for another big move. AVGO, which is Broadcom. This is another AI play. AVGO, I think I bought 1350. And I've been sitting there going sideways ever since. 1421. You're trading at 1409. I don't think that's a bad price. Again, I'm in at like 1350. I like that sideways move. When we look at the long term of this one, it is in this trading range. The second it breaks out of this trading range, you're going to want to be in that. The MACD, still super high. The RSI, still a little high. But I don't think we're done with this move in AI. Now, we've got a ton of other ones, a ton of other stocks. That typically tells me that we are in a bull market and that we are going higher. Now, I personally think that individual stocks will go higher. I do think that, but I do think from an index standpoint, I think we're looking at a very volatile up and down sideways move here. AAPL, APP, got a buy in here at 83.91. Do you want to buy it? MACD has pulled back. RSI is down there. We go over to Seeking Alpha and we look at AAPL and we go to APP. It's a strong buy in the quant. You look at the momentum, A+, revisions, B+, growth, A, profitability, A. Again, you look at these stocks and you can find them in Seeking Alpha, but AAPL is on the watch list. So, say you don't want both of them. I get Trendspider. I give you the daily stock pick watch list. It has APP in it. All of these stocks that are in the scans are in watch lists or of some kind. Whether they're in the Dow, whether in the NASDAQ, S&P, or in my personal list, you'd have to have Trendspider to distinguish the two. But if you don't want to spend any money, you get them free in the newsletter. Let's just go to yesterday's newsletter and take a look. Again, yesterday's newsletter, I gave you explanation of everything that's on my screen. I gave you an explanation of my portfolio. And then you scroll down here to the bottom and you see these scans. These are the stocks that show bullish tendencies in the 4-hour algorithm. And you can chart them on your own program. Doesn't matter. You can do it on your own program. You can import it into your own thing. But if you want the 4-hour algorithm and you want to actually analyze the stock the way I do, get Trendspider. Again, it's $53 a month. It's not that much. So if you have any questions, hit me up. The Linktree has everything that you need right here across the top. Now, there's Trendspider link. There's the Seeking Alpha exclusive. That's the premium. Alpha picks we went over. If you don't have a desktop software, you should. Webull has a free desktop software, plus you get free stocks. Put a couple $100 over there. Try it out. You can even paper trade. If you make money using my 5-hour algorithm, or you made money in GameStop, what Brandon was talking about, if GameStop takes off, Gary's getting paid. That's either through Venmo, Cash App, or PayPal. They are all down here at the bottom. They are all down there at the bottom. If you have you want AT&T at your house, sign up. I get you $75 off. If you want Visible as your phone service, like I have, it's $25 freaking dollars a month, and I save you $20. You can even add it as an eSIM on your phone and have both of them just to try. Don't put your number over first. You can put it over second. You can try it for a month. It's $5 to try it for a month, but you can sign up right there. So all of it's here. If you want to hit me up on any of the socials, they're all up there. Okay, have a good Friday, 12 o'clock. Roaring Kitty is live. Roaring Kitty is live. So tune in. I will be there. There's no way you're going to find me, but I will be there. Maybe I'll be on Zoom with the paid members of the newsletter, but we'll see what happens. But again, it's noontime. I think it's the biggest event of this week. The jobs number took us, when he announced this, the job numbers, I didn't care about it. It is all about Roaring Kitty today. Okay, take care. Have a great weekend. Let's hope the GME pops. Take care. Bye.
I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound trading bell, my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.